Hi guys, as always, every Thursday at 12, Avis the fund, right? We want to provide the value as much as possible to our investors and the new clients. Today, we want to talk about organic foods, and here's your host, Igor Shaltnov with Avis the fund. We've been in business since 2020. We invested in multiple, being like clear, it's like 20 plus different investments, and would love to see you on board with us for the next one. Again, the topic for the webinar today is going to be organic foods and how we got into that market, and the couple successful cases we have. So I'm going to start sharing my screen real quick. So we're going to go through the deep dive into the market and the food opportunities and why we think it's a good opportunity for the next 5 years. At Avista Fund, we have certain structure, and 70% of the time and 70% of the effort of our company focus on multifamily. There's two sides to that. One is we're on the debt side, meaning so we have Avista Private Credit Fund, and the second piece of it, we got syndication. We're going into different deals, right, which is one-off deals. And the last one we closed just recently, it was Dallas market, 226 units in DeSoto. That was very successful, and we purchased that very much discount, and it's a beautiful deal that's going really, really well. The 20% of the time we focus on a land entitlement, which is nothing to do with construction. It's all cash deals as well. And lastly, we focus on about 10% of our time and effort into the organic foods. Organic food is a really big market right now. It's a huge trend. We'll talk about that later. And we want to talk and focus about organic food today specifically, right? And we want to give you a couple of cases, successful cases. And one of them is the beverage, and the other one is just a yogurt. Okay, without further ado, let's start it. Avista Strategic Risk Pyramid. So what we talk about here, we talked about last time. So we have a base layer, right? Everybody has a base. What the base means? The cash, something you can rely on. It's very liquid. There's a retirement account, for example. There's a stocks. You can just liquid, you can sell it easily. There's a rental properties, for example. You just manage a couple of them. And the next stage, when you say, okay, I'm here, we're good, so we build certain things, how we can look at alternative ways to invest. And that's where we come in as a private fund. And the first and base layer for us inside of the fund is start from the blue color here. So it's a private credit fund. When we actually lend money to the people who wants to do multifamily real estate, who wants to do the commercial buildings, who wants to kind of maybe just repair or maybe rebuild or maybe do something with their commercial property. The second layer, it's a value add multifamily. This is the core product, and that's going to be on equity side. If the private credit is on that side of multifamily, and the value add, it's going to be more on the equity side when you invest in equity. And that one is going to probably give you the private credit fund between 9 to 11% return, and then the value add multifamily between 14, 18%. If you're going up to the top, so the land entitlement development, so it's about 20% return on investment, and then maybe plus. And organic foods, it's like more of the 20 plus percent, 30, 40%, right? Depending on the deal. And that's the reason we want to blend the return. So we want to be very, very stable at the bottom of the pyramid, right there. And we want to go in the middle, so kind of a little bit more risk, but still very secured way to probably earn double-digit return, the high double digits. So it's 14, 18. And then if you go to the pinnacle of the pyramid, so you want to be participating in something exciting. You want to be participating in something new. You want to be some new technology. You want to change in the world. And that's exactly why we said, so listen, we want to be part of something else, something like bigger than just a money part. So something we can change the world with, I would put it this way. And organic foods is one of the things, because they innovate. They bring technology. They bring something new, the new product, a new kind of the way to serve the people as well. And this is just in general very exciting territory. We want to move on, and we want to talk about in 2022. That's when the first time we pulled the trigger. So we're watching the company, the couple of them, and then the first one we pulled out the trigger was we actually looked at the Salty, right? The deal was brought to us by Cambridge SPG company, and we talked to them multiple times. They showed us the company, and meanwhile, in 2022, we experienced a rise in interest rate, tightened lending conditions on the market, and the capital markets was pretty tight as well. Unpredictable valuations, and then risk-adjusted return less compelling to us in general inside of the multifamily market. We said, okay, what can we do different? And like Warren Buffett was saying, you want to own a really good company who has a great product and been doing this for a while. And being entrepreneur, so there's really ceiling right to the break. So a lot of companies will never break $1 million. Not to say they're not going to break at $10 million. And that's where we come in and say, listen, so what can we find in which industry and in which market we can find a company who is doing really well and who has a huge upside potential? And for us, it was organic food. And there's a couple ways. Once, I do want to make sure we eat healthy, right, at home. And having that in place and transition that to the family, transition that to our customers. So we want to get into organic foods, not just like a trend, but it's a movement. Actually, people today start to consume the product a lot more consciously. So they're thinking through what they're going to be eating. And the mind is shifting. So let me eat less, but more quality and more healthy, right, food. It's not going to be on the consumption side, because the problem was overweight, right, obesity, or in the U.S. market. And we are actually said, listen, how we can be the part of change where the people choosing more conscious consumption, and then they want to have more healthy choices at the table. Right. And this is a long-term demand. That's what we feel like. That's what we see. It started like back then, I don't know, 10 years ago or so. And then now it's even more and more. Not to say there's alternatives to, for example, milk and the coconut cold. And this is alternative to the milk yogurt. So the last very successful yogurt company was, what's the name of it? Chobani, right? They have a 3 billion today revenue, right? Chobani at the 3 billion revenue. So if you tap into the market, so if you can catch that consumer who's actually shifting from the milk contained, so to the non-milk, right, product, so that's going to be the huge opportunity into the future. This is one of the examples. The second idea, the distribution channels. Look how it changes that. So DTC, direct to consumer, ideas on a subscription of the products. Example will be, again, coconut cold. If you subscribe to their product on the website, which is direct, right, subscription, you can actually get different flavors. If you go to the store, if you go to the Whole Foods market, so you can only buy two choices. Like there's two different things you can buy. One is original, the second one is chocolate flavor. But if you subscribe, you get an access to all of them, and you get an access to the new flavor coming up as well. So this is the huge model, right? It's like a crumble cookie. They just come up with new, every week, I would say they come up with new flavors. And that's why the customers are driven, right? So they want to consume, they want to follow the brand. So Amazon, again, that's a huge example of difference. So 10 years ago, who can possibly think so you can purchase something from Amazon? And then the fitness gyms and the juice bars, there's different distributional channels you can start with, so maybe you can just complement your brand with. And then the opportunity of getting in early. This is absolutely this is essential. This is one of the first things. So if the trend start to evolve today, right? I'm going to move to the next slide. if you can get early, right, entry price much lower at early stage. I want to say it again. The entry price are much lower at the early stage. And we feel like for the some products, we still at the early stage where we may be at the stage where we have a unique opportunity. We have a unique product or unique technology, and we say we want to be part of that trend going forward. The upside, when the brand scales successfully, the return multiplies, can be just significant. So there's only a ceiling to that. And the reason why, again, the larger CPG, which is consumer packaged goods companies, often acquire emerging organic brands once they reach certain market shares, and they're willing to pay the premium. They're willing to pay high premium. Why? Because all they need to do, they want to wait for you to survive. They want to see you building that customer base, and then they plug you in to their distribution channels and they scale it by 10. So they can afford to pay you a 40, 100, $200 million to then just scale that same company to $1 billion or $2 billion, right? So what I'm saying is here, that's a huge upside. The valuation is still low, and then the opportunity of acquired company right into the future is huge as well. And it's very important for you as an investor because you want to be at the spot, you want to be at the opportunity, which is can 5x, 10x, 15x, 20x, right, for your money. Good. And meanwhile, again, I'm going to wrap it up real quick. It's really good to be in the stable market of real estate or maybe debt fund, and then maybe cheaping some of the profits into the more rewarding environment. I would say a little bit more risk, but it's not like a 90% of your portfolio. It's like only 10%. It's just the tip of the iceberg, right? But it's very, very beneficial, possibly, right, into the future. So what's Salty? Salty is the highest velocity refrigerated beverage in US, and it's organic beverage manufacturer with national recognition, offering the premium selection of top performing beverages and products. And what's unique about Salty? Why would you just even look at them? And the unique thing is, if you want to pasteurize something, the old way of doing this, and maybe the only way of doing this, you put it over the heat and you just heat the product over so all the bacteria is going to get killed so you can reach that shelf life you need it to be at. Or you can add conservatives like preservatives into this product, right? And you can even increase that shelf life by a certain period of time. Here's two problems. One is if you got fresh squeezed juice and it's not pasteurized, it's going to get bad in a couple of days. Period. Right? There's no shelf life. So that means by the time you distribute it somewhere on the East Coast, whatever, so it's already bad. So that's one. The second thing is, they found out there's UV technology at university, and they can make it better. UV technology meaning, so they have a transparent tube, they put the liquid through, and they put the lights, and then it just penetrates the tube from 3 or 4 different places, and it's actually pasteurizing as it going through that tube, right? It's pasteurizing itself, right? Basically, on the way out, it's already pasteurized, and it's bottled in the glass bottles, which is super, super beneficial, right, for the consumers. And it's a lot better than plastic, obviously, right, option. And the people would love to get those, which is, again, vitamins inside of that liquid. They got full vitamins, and then you got shelf life as well. And lastly, you got a technology. I'm talking about the company back. So we got a technology you can sell, right, as a technology as well. It's a very unique technology. So we want to play the video at this point right now. And let me add to the stage video real quick. Into Salty Company. That's it.
pack, a 12 pack, or a 6 pack 15 ounce. So this will get changed over depending on the format that we're running. But right now, obviously 2 ounce 12 pack. Yeah, bottles get loaded in the buckets here. Carton gets picked. Bottles get loaded in, and then it gets pulled to the lab.
So you just look through the facility. This is the beautiful facility itself. And the good thing, it's all consolidated. It's all within the same facility, and they're ready to scale that model to the next level. That's very, very important, right? So they can scale it. So, and then once they scale it, we're probably going to be talking about like $17 million in revenue. So the next slide we're presenting, and there's a stages in the company life, right? The first stage is when you break $1 million. So 90% of the companies in the United States will never break $1 million. And then if they will never break at 10 million. So we want to make sure we get into the investment when you have that run rate from 0 to 10. And then once we broke 10 million, and it's a less risky and it's a less, I would say probably scary for us to invest. And the reason why, because they just most likely to survive and go through the next stage. Once they broke 10, most likely going to go to the whatever, like $100 million if they doing the right things. And then here's example, you can give it to the general public. And the reason why, because they already at 21. In 2022, when we look at the company, they were doing at $21 million. And then the idea was so we can scale to 30 million the year after, and then 40 million. And in 2022, it all looked, maybe possible. That's why we just put only 10% of our attention and the effort right into this thing. But then when you look back right now and the revenue at 43.1 million today, we're like, okay, that's a really good trend. Okay, that's a good company. That's a good team. That's a good technology. That's a good idea. That's a good product. So now you have a lot more confidence in the product, right? Not to say every time I go to the Whole Foods, I buy it myself and I consume that product. So try the super shots, right? This is a really, really good product. So what I'm saying, the market is voting by paying for the product. And you can tell, you can see that people actually want that product because they voting with the money. They purchasing your product every time you distribute that. So again, from 21 to 43, imagine what's the equity multiple is here. And if we're looking at a couple more years, most likely that company is going to grow to $75 million within the next 2 years. So that's a huge upside potential. And that's where we want to be. And that's why we are present in the organic food market. Okay, next investment opportunity will be the coconut cold. So we gave you a little bit of the numbers and teaser, I would say, for coconut cold. Can you imagine the coconut cold even more successful case? So the coconut cold company all of a sudden exploded on the revenue side, on the demand side, on the scalability side of the things. So we're going to talk next Thursday. We want to talk about that. And again, for you guys who's interested in the product of the organic food investments, just let me know. You can send us email at invest@avistafund.com. Again, invest@avistafund.com. Go to our website and again, fill out the form. It's going to be avistafund.com. So we're going to be glad to talk to you next Thursday. So we want to talk about coconut cold. Thank you guys for your attention. Peace out, and let's stay in touch. Right? Have a good one. Bye-bye.